Welcome back to Talking Business as Usual. Today, we're diving deep into a company most of us think we know, Shopify. We're going to look at what their real business model is, how their latest earnings look, and tackle the big one, is their entire business at risk from AI? It's going to be a good one. And hey, if you enjoy what you hear, a quick follow and a 5-star rating really does help us out a ton. So when you hear the name Shopify, what's the first thing that pops in your head? For most people, it's a simple tool to build an online store, right? Kind of like a digital lemonade stand for small businesses. But let me tell you, that view is barely scratching the surface of what's really going on. The reality is, it's way more ambitious than that. Shopify is actually a financial technology engine, cleverly disguised as simple software. It's a powerhouse that profits directly from its merchant success, and now it's positioning itself to build the actual infrastructure, the rails, for the entire AI economy. Okay, let's get into what that really means. To really understand Shopify's grand strategy, you've got to follow the money, and I guarantee you it does not flow from where most people think it does. Just take a look at this breakdown. See that massive slice of the pie? Over 3/4 of Shopify's revenue doesn't come from those monthly subscription fees you pay to have a store. Nope. It comes from what they call merchant solutions, which is basically a whole suite of services tied directly to how much stuff their merchants sell. So you can think of the subscription fee as just the entry ticket. It gets you in the door. The real economic engine, the thing that powers the whole business, is merchant solutions. We're talking payment processing, capital loans, shipping, all of it. This creates this beautifully aligned model where Shopify only truly wins when its merchants are winning and selling more. All right, let's break down the 3 core components of this success engine. These are the tools that are fueling that massive 76% chunk of their revenue. First up, and you have definitely seen this everywhere, is that iconic purple Shop Pay button. For a customer who's used it just once on any Shopify store, their next purchase becomes this seamless one-tap deal. It's so fast and frictionless that merchants have seen abandoned carts drop by up to 50%. I mean, that is an absolute game changer for conversions. Second is their B2B platform. So picture a local coffee roaster. Using Shopify B2B, they can sell a single bag of beans to you or me, and then turn around and sell a giant wholesale order to a cafe, all from the exact same storefront. They can even set custom prices and payment terms. This part of their business is absolutely on fire, growing at nearly 100% year over year. And the third piece is Shopify Capital. This is so smart. Imagine a swimwear brand that needs a bunch of cash in February to stock up on inventory for the summer. A traditional bank might look at them and see no collateral, but Shopify? Shopify sees their entire sales history in real time. They can offer a cash advance in days, and it gets paid back automatically as a percentage of future sales. A bank just can't match that level of insight and speed. Okay, so the fintech engine model sounds great, but does it actually work? Well, the numbers from the recent financial reports, they tell a pretty powerful story. In 2025, Shopify didn't just grow, it actually accelerated. We're talking over $11 billion in revenue, growing at 30% year over year, and, this is the most impressive part, generating a massive $2 billion in free cash flow. This is no longer a growth-at-all-cost company. This thing is a cash-generating machine. This combination of fast growth and high profitability gets them a Rule of 40 score of 47%. Now, in the tech world, any score over 40 is considered elite. It's a key sign of a really healthy, operationally efficient company that knows how to balance expansion with financial smarts. Now, this chart right here is what gets really interesting. It shows you exactly why their model is so sticky. Each of those colored bands represents a group or a cohort of merchants who joined in a certain year. And as you can see, every single group consistently spends more on the platform year after year. It is the perfect visual of compounding revenue. But a new technological wave is building that threatens to change commerce as we know it completely. It's called Agentic AI, and it's where AI assistants start making purchases for us. You know, history shows us that big shifts in how we shop don't happen overnight. Think about e-commerce back in the 90s. It took roughly 10 to 15 years to become mainstream. Well, right now, we are at the very, very beginning of that same curve for Agentic AI. We're basically in 1995 all over again. So the biggest risk here is something called brand erasure. For high delegation tasks, things you don't think about, like reordering an air filter, an AI agent is just going to find the best specs and price. It won't care about the brand. That's a zero-click purchase. But for things where human trust and discovery matter, like finding a unique fashion piece, we're still going to want to be in the driver's seat. The threat to commodity goods, though, is very, very real. So how does Shopify defend its business from being automated away? Well, it's not just with better software. They've built a series of incredibly powerful moats that an AI just can't easily cross. And this lays out their strategy beautifully. For Shopify Capital, the moat is all that private, real-time sales data that no outside AI can get to. For international sales, the moat is legal and regulatory complexity. An AI can translate a website, sure, but it can't file VAT taxes in Germany. And for their physical point-of-sale systems, well, the moat is the hardware in a real store. An AI agent simply can't disrupt you trying on a dress. But here's the kicker. Shopify isn't just playing defense. It is actively on offense, building the infrastructure to win in the age of AI. They're giving their merchants AI co-pilots like Sidekick, which is basically an AI chief of staff, and creative tools like Magic, which is like a generative AI intern. But the most critical move is that they're re-architecting their storefronts to be machine-readable, with the goal of becoming the go-to, trusted API for the entire AI shopping economy. So if you're looking at Shopify as a business, the key thing to understand is how resilient its model is. It's built on consumption, not employee licenses, so it's less vulnerable to layoffs. It's a classic picks and shovels play on AI, meaning it benefits from the trend no matter which AI wins. And its revenue naturally grows with inflation. Okay, and here's our regular reminder. This explainer is just for informational purposes. It is not financial advice. Please, you absolutely must do your own due diligence. And that leaves us with one final big question. Shopify has built this incredible fintech fortress that profits from its merchant success. But as we move into this new era of AI-driven commerce, the biggest question is whether it has built the definitive gateway for that new world, or just a very, very well-defended island. Thanks for tuning in to Talking Business as Usual. If you enjoyed this, a follow and a 5-star rating would be amazing. We'll see you next time.